Welcome to your deep dive. Today, we're diving deep into Zomato Limited. You know that restaurant aggregator and food delivery company? They just had a board meeting and, well, let's just say they made some big moves.
Yeah, they did. A lot to unpack there from their financials to some pretty ambitious plans.
Right, so first things first. Zomato released their unaudited financials, for the quarter and half year that ended September 30th, 2024.
Mm.
And get this, they're planning to raise a whopping 8,500 crore.
Wow.
Yeah, through a qualified institutions placement, or QIP for short. Basically, they'll offer shares to certain investors.
It's a pretty common way for companies to raise large amounts of capital, especially when they're looking for targeted investment.
Makes sense. But here's the thing. In the midst of all this financial maneuvering, they also made this tiny investment, like really small, in a company called Byondnxt Smart Home PVT Limited.
Interesting.
Yeah, it was just 6,000. It almost seems insignificant compared to the 8,700 crore they're trying to raise, you know?
It's definitely a curious juxtaposition. We'll circle back to that Byondnxt investment in a bit. But let's dig into those financial results first.
Sounds good. So Zomato's revenue this last quarter was 4,799 crore, which sounds impressive, but
But their profitability is where things get a little more, shall we say, interesting.
exactly. So help us understand this. What's the deal with their standalone results versus their consolidated results?
Good question. So the standalone figures, those reflect Zomato's core operations, the heart of their business. The consolidated results, on the other hand, those include the performance of all their subsidiaries.
Mm,
So it gives us a more complete picture of their overall financial health.
got it. So what does that fuller picture tell us? Are they doing well or not?
Well, the consolidated results show they're not quite profitable yet. However, their standalone figures are actually looking pretty good. This suggests that Zomato's core business is moving towards profitability, even as they're investing in and integrating other ventures.
So they're laying the groundwork for future success, but they're juggling a lot of projects at the same time.
Exactly. And it's important to note that these financials, they're unaudited. They were, however, reviewed by Deloitte Haskins and Sells, who gave a qualified review.
Which basically means?
It means they didn't find anything glaringly wrong, but they also didn't do a full-blown audit.
Okay, so no red flags, but still room for a closer look later on.
Right.
Now, you mentioned that Deloitte pointed out a couple of specific things. One was a GST issue, and the other was some unreviewed subsidiaries. Want to unpack that GST situation first?
Sure. Zomato has been hit with what are called show cause notices from GST authorities in India.
GST, that's the goods and services tax, right?
That's right. Basically, the authorities are questioning the way Zomato handles taxes on delivery charges.
So are we talking like a big tax bill that Zomato might be on the hook for?
Potentially, yeah. See, the DGGAPN authorities, they're looking at deliveries that happened between October 2019 and March 2022, and their demand is something like 401 crore. And then on top of that, you've got the West Bengal GST department. They've got their own separate demand for 19 crore for that same period.
Wow, so combined we're talking almost 420 crore. That's not chump change, even for a company like Zomato.
No, not at all. And it definitely throws a wrench into their financial forecasting.
Mm.
But here's the thing. Zomato's saying they're not liable for this tax on delivery charges. They're saying they got expert advice that backs up their position.
Okay, so it's a bit of a waiting game then.
Yeah, we'll have to see how it plays out. It's definitely a developing situation, something to keep an eye on for sure.
Definitely, especially for investors. Now, speaking of interesting moves, remember that tiny 6,000 investment in Byondnxt? What's the story there?
Well, Byondnxt, they design and manufacture those, what are they called? Those like smart kitchen appliances, like the fancy ovens and blenders.
Oh, yeah, right. Like the ones with the touch screens and stuff.
Exactly.
Okay, so it kind of makes sense alongside Zomato's Whole Food thing. But still, that investment amount is so small. Why even bother?
Well, that's where it gets interesting. You see, Zomato already has a stake in this other company, Mukunda Food PVT Ltd. They make like smart kitchen equipment too, but for restaurants and businesses. Byondnxt, on the other hand, they're going after the consumer market. Everyday folks like us.
So is Zomato dipping their toes into the consumer appliance market then?
It's possible. Worth noting that 6,000 investment, that only gives them a tiny 8% stake in Byondnxt.
Huh.
It's like a low-risk way to kind of, I don't know, keep an eye on things, see how the company operates, if there's any synergy there.
Yeah, test the waters before, going all in.
Exactly. And speaking of going all in, Zomato also acquired not one but two companies, Orbgen Technologies Private Limited, OTPL, and Wasteland Entertainment Private Limited, WEPL.
Okay, so from a tiny investment to what I'm guessing is a much bigger acquisition.
Yeah, we're talking significant investment here. Zomato acquired those two companies for a combined INR 2014 crore.
Okay, hold on. To put that in perspective, how does that compare to, like, the amount they're trying to raise with that whole qualified institutions placement thing?
Way more. I mean, it's more than 4 times that amount.
Wow. Okay. So who are these companies and what do they do? Are we going to see, like, samosas delivered with movie tickets now or something?
Not quite, but you're picking up on the strategic shift here. See, OTPL, they were in the business of movies ticketing, and WEPL, they focused on events. And they both came from 197 Communications Limited. That's the company behind Paytm.
Got it. So Zomato is making moves to a bigger player in the digital space as a whole. It's not just about food anymore. So tell me about the money side of this acquisition. How'd that go down?
Well, they actually split it into two parts. First, they did a secondary share purchase from 197 Communications, the Paytm people. That totaled INR 758 crore for both companies. Then they made a primary infusion of funds, investing directly into OTPL and WEPL, and that came out to INR 12,260 crore.
So they're not just buying up existing shares, they're putting in serious capital to help these companies grow. That says something about their commitment to this whole thing.
It does. Now, there's one more interesting little detail about how they allocated the purchase price. A big chunk, especially for WEPL, was attributed to goodwill.
Goodwill, that sounds positive, but what does that actually mean in this context?
Basically, goodwill represents the intangible value of a business, things that aren't like physical assets but still contribute to its worth.
Like what? Give me some examples.
Think brand recognition, customer loyalty, a strong leadership team, a good reputation. Those are all part of goodwill.
Okay, so they basically paid a premium for WPL because of its potential, its like brand power in the events world.
Exactly. They see a future for the events business, and they're putting their money where their mouth is.
Okay, so we've covered their financial performance, that interesting little investment, and now a major acquisition. What else did Zomato have on their plate at this board meeting? Well, they also talked a bit about their employee stock options.
All right, they got the green light to implement and tweak a few of their employee stock option plans.
Hmm.
So basically, that gives employees the chance to buy company stock at a set price, usually with a nice discount.
So it's a way for employees to like directly benefit from Zomato's success.
Exactly. It's a smart move to attract and keep talented people, especially in those competitive fields like tech and online services.
Makes sense.
Oh, and they also want to give interest-free loans to their Foodie Bay employees' ESOP trust.
Interesting. So it seems like Zomato is really going all out to keep their employees happy.
Yeah, for sure.
I mean, when you think about it, they're juggling a lot right now. Their financial results, those potential regulatory hurdles with the whole GST thing, those strategic acquisitions. It's a lot.
It really is. It's like they're navigating this constantly shifting landscape, and they're making some bold moves to stay ahead of the game.
It's pretty wild to see a company like Zomato, which, let's face it, most people just think of as like a food delivery app,
Right.
to see them making these big moves to expand, branch out.
It's definitely a departure from just delivering your butter chicken. Right?
Exactly. So what's the takeaway here? What does this all mean for Zomato?
I think they're sending a pretty clear message.
Yeah.
They're not content with just being another player in the market. They want to be a leader, a force to be reckoned with.
Yeah.
It's ambitious, no doubt about it, and time will tell if it pans out.
Yeah.
You got to admire their drive,
Yeah.
their willingness to adapt and innovate in such a fast-paced market.
Absolutely. It really makes you wonder what they'll cook up next.
I know.
Well, there you have it, folks. Your deep dive into the world of Zomato, their financials, their acquisitions, their employee incentives, the whole shebang. They're making waves, shaking things up, and it seems like they're just getting started. What does the future hold for Zomato? Well, that's for you to ponder.